So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey everyone, this is Kirk here again from Option Alpha, and welcome back to The Daily Call. Today we're going to be talking about the Great Depression stock market recovery timeline. And more importantly, I think this is an interesting topic because as I've been reading a lot more about debt cycles, the Great Depression, the Weimar German Republic, and hyperinflation, I think it's interesting because of the timeline that we're on right now, where we could be entering into the next phase of this market, which could potentially be recession/depression/ some sort of consolidation and sideways movement. And so I think it's important that we understand a little bit more about history and how long things might take to recover, because the fact remains is that many of us have not gone through, basically decades or even multi-decades of no growth or zero growth or low growth in the markets. So when you look back at the Great Depression stock market recovery timeline and the timeline that it took the market to get back up to its original peak right before the 1929 crash, on a nominal basis, it took about 25 years. Now, really think about that. Almost a quarter of your life is how long the market took to recover. So naturally, when I hear stories about how people were hoarding cash and hoarding gold and just like people's mentality coming out of the Great Depression, it's very easy for me to understand why they have such a, saving mentality, or kind of, I don't know if I call it hoarding, but just like a very conservative, fearful mentality of the markets. Because on a nominal basis, it took 25 years for the market to recover. Now, many people would say, okay, Kirk, well, that's not really true because that's just from a price. If we adjust for inflation, because we actually went through a deflationary period during the Great Depression, then we readjust for inflation, it actually only took 4.5 years. Okay, fine. Yes, if you adjust for inflation, it took 4.5 years, which is still a long period of time, but that is just the price-wise. Like, most people actually never recovered from those events. And what I know for sure is that when you have somebody that goes through, a 60, 70, 80% drawdown, there's almost no hope that you actually recover. Now, yes, there's probably some people who held through that, right? Maybe. I don't know how many people actually held through the entire Great Depression and got back up to those levels that quickly, but I would dare to say that it's almost non-existent. So the fact is that although it took 4.5 years on an adjusted basis, that doesn't really do us any favors, because if inflation is running rampant and prices of everything are going up, then what does it matter if our stock portfolio is just basically catching up? We're losing here and gaining there, right? So I think it was just an interesting period. I think the end result here is that, if we go through potentially another period like that, which is not off of the table by any stretch, and anybody who thinks it is totally fooling themselves, then it could be a really long time before the markets recover. And so that's why I think, I'm telling you guys, I truly believe that options trading is going to go through this massive, massive growth during the next downturn in the market. With the number of people who are going to be interested in it, the number of people who are going to start trading, we're going to start to see a major shift in market dynamics from more equity style trading to more derivative style trading over the next 10 years than I think we've ever seen in the entire history of derivative markets. And it's because we could potentially be in basically a lost decade or lost multiple decades, potentially, who knows, of the markets not really going anywhere, inflation going up, deflationary, pressures coming back down if that happens. And that could really be the catalyst to kind of propel the options market. So learn about some of this stuff, read up on the Great Depression, read up on some of these other market declines and debt cycles, have an understanding of what happened during these events before it happens to us, even if we're in potentially that time right now. I think it's really important. So hopefully this helps out. Hopefully it gives you some food for thought, as always. And until next time, happy trading. Thanks for joining us on The Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on The Daily Call from OptionAlpha.com.